Good evening, all. Hope you guys did uh, safe trading today because last 2 days it is choppy trading. I mean, although it's a range bound, it's today was more choppy. There was no clear direction. So what I would like to share here is, hope you guys can see my share. Oh yeah, you're seeing my share. All right. So welcome to Billionaire. I'm bringing one more video. Tomorrow is expiry. I'll make it quick. I want to make you wait for too long. So how did the trading happen? How did it go? So today, this is what I made, 5,580. But remember, um, today was a kind of no trading day as there was no good risk to reward. I entered here, my very first trade, made it went up to 8.5. I waited to see whether it can break R3 and go up to R4. But when I saw the second candle, I knew R3 is a selling zone, is going to come back to S3. So I exited here, then did a couple of trades once here after S3 was broken, and booked a loss of 2K from 7.5 to 5.5, closed the trade for the day. And make no mistake, I'm a part-time trader, not a full-time trader, and I work purely on pivots with price action. Now here, S4, why did I buy? When I started seeing this long wick, I bought here. S4 is a buy zone, S3 is a buy zone. Why did I exit so quickly here? Because R3 is a selling zone. Once R3 is broken, next target was R4. Above R4, it's a breakout. R4 is also a selling zone. This is a dark cloud pattern. If you want, Google dark cloud and identify. A dark cloud near R4 signifies a reversal. Market came back to again selling zone. Here it went sideways, tried to break the selling zone, false breakout, then again went back to buy zone, came down to another buy zone. But was there a defined range? Defined range means something like this. Although it is low, this is the range low, this is the range top. Market will be hovering between these two ranges. Yes, it looks like a range, but see here. First range is here, second is here. In between it pulls back, then again comes here. So we need to consider this as a choppy market, very choppy. And also I had given the targets. If it breaks R1 and sustains above R1, next target should be 17,300, 17,325. However, it took a reversal near H4. This is the reason why I use Camarilla pivots. It clearly indicates, of course, along with other pivots, I try to identify the levels. If this is a selling zone, I'll be cautious. I will watch for price action like this. If this is a buying zone, I watch for price action like this, engulfing. Even this one, false breakout comes back. This is a morning star. Although this is not below, this is a morning star. Doji followed by a buying decision indicates market will go up. But was there any money today? No, there was very less money. So do not worry. Now I would like to quickly show you how pivots are going to be. Now this is, watch this one. Range bound. So last 2 days, we have a very clear range here, high and bottom, and that is where we have R1 and S1. All right. Let's make 17,274 is our R1 and 17,165 is our S1. So tomorrow is expiry. You have to be very careful. Usually I'm anticipating a flat expiry, but if the range gets broken, again R1, S1 and sustains, you have to anticipate and take the risk to go down. Why? Because after a range, if a market breaks, you have a high probability of market going down. See what happens here. Almost this is a 3 days of choppy market goes down. So you have to watch 2 days of range, market goes up, gaps down and comes down. So there are a lot of several reasons why R1 and S1 are high probability trades. See, this is a range breaks, market goes up. So what I would like to call out here is we have a On a daily candle, we have a doji above 20-day moving average. This is very important. If you see from the top, market comes down, breaks 20-day moving average, the median goes towards 20-day or hovers above 20-day, comes down. So we are clearly in a downtrend. Still, we are not in uptrend. Even here, it tried to break, came down. Again, near 20-day moving average, it comes down. Now it's going up. We are having a doji indecisive, and if doji is taken out, again there might be further downward movement to the levels up to 17,074 and 16,909. You need to remember this and take the trade. So these were the levels. Although the levels broke here, this is how the levels will become. You can freeze the screen and trade. So these small levels, right? It is creating a lot of clutters, which means tomorrow market needs to break all this clutter with a strong momentum. Then only you can have a very good trending day. Otherwise, embrace for another sideways and flat expiry for tomorrow. Hope this helps. Please do comment, share, subscribe, and encourage us to bring more videos. Today I'm not providing more insights because there is no more insights. We are sideways. The simple high probability trade should be above the range broken, whichever side it breaks. I'm always a neutral person, but since we are seeing a kind of negative divergence, even on hourly candle, I think there's a negative divergence. From RSI, we have 15 minutes, we have negative divergence. Watch this one. This peak, these doji candles and this peak, the peaks are almost at same level, slightly down, but price was going up. So we have divergence, which means the momentum on upside is not standing. People are not convinced, but still market can surprise. But overall, the trend is bearish. And if it breaks the 2 days range, expect more downside. And I would advise you to caution. The reason is trade with caution. New Year is around the corner, and most of the big players will be on vacation. Volumes will be low, and there will be a kind of increased volatility. So usually, since I trade only in Nifty around this time, I go with very less lot size. That's the reason you see my profits is around 5% of my capital. Usually I would go for 10% to 15%, but I am maintaining 5%. Hope you get some idea on how to trade by watching my videos. Thank you all. Have a good day and happy expiry.